Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to Crypto for Advisors, where we dig into how financial professionals can stay ahead in the digital assets era. I'm your host, Andrew McPhee, and I'm honoured today to be joined by Clayton Daniel, the CEO of Ensemble. Clayton has built a successful career at the intersection of advice, education, and innovation, becoming a respected advisor, community builder, and thinker. At Ensemble, Clayton leads a platform that empowers advisors through collaboration, education, and shared growth. He's also an active contributor and voice in advisory services, writing, hosting conversations, and pushing our industry forward. So today, we'll tap into Clayton's unique perspective, bridging the people side of advice with the emerging infrastructure of crypto and digital assets. So welcome, Clayton.
Thank you so much. What an amazing introduction as well. So I appreciate that.
Amazing introduction for an amazing individual.
I'll let you have that one.
All right. The Zing account, it's one love, all right?
Correct.
All right. So Clayton, I thought we might start actually with you maybe describing to our listeners what Ensemble...
Yeah, sure. It started 11 years ago, which still blows my mind. It was myself and a handful of other financial planners. Most of us were practice principals. We're just trying to rapidly accelerate the journey to mastery. That was kind of the whole aim of the game. And we realized that speaking with other financial planners was typically the fastest way that we could improve, our entire advice process. Originally kicked off as XY Advisor with one event. That event has gone into, I've lost track, probably close to 100 events at this stage. A podcast, which we've hit 1,000. It's a platform with over 10,000 members, each of them signing up individually. It's been quite the journey.
And what was the original bond that got that early first cohort of advisors, planners, coming together and sort of connecting before that network effect took off? What was that common bond?
You know what? I've never really been able to explain why it worked. And I was looking at something earlier today, and it was a list, I think it was over the last maybe 5 to 10 years, of all of the companies that Amazon has launched over the last, I think maybe 7 years or something, somewhere between 5 and 7 years, and had about 20 or 30 different companies that it had launched, right? And think about the size of Amazon. Think about the reach that it has, the ability to cross-promote, the endless budget, the endless talent internally. And its success rate was sitting at around 10 or 15%. It was overwhelmingly failures. And this is Amazon launching businesses, right? And so there was something in the air that happened. It just caught, and it's almost impossible for me to describe why that was the case. It just has always had that thing, whatever that thing is. It has it. It has, 11 years later, we're still talking about it. And yeah, it's hard to kind of articulate it. Yeah.
Yeah. So is that X factor but really it sounds like it's about you managed to just get a community going and those early that the essence of building a community in an environment that's as you say, 85% failure rate is pretty common. It does sort of have a lot of parallels with Bitcoin when if I think about Bitcoin and the potential success rate of Bitcoin when it first kicked off, was probably pretty minuscule. It was minuscule, and yet it's managed to somehow survive through the different phases, its evolution, and to reach where it is today as a significant asset class in its own right.
Absolutely.
It's just that X factor, isn't it, right?
Yeah, correct. Who can really explain, the first time I heard about Bitcoin was probably, it would have been like maybe 2011. So this is maybe 18 months after its maybe 2 years, something like that after its launch. So I wasn't like a hyper early adopter. And I just thought it was a joke, right? I think at the time I was a financial planner and, my immediate response is don't waste your money, don't get scammed.
Yeah.
That was my very first initiation into it. It was my friends who were hardcore developers, who were technologists,
Yep.
were the first person to sort of share it with me. And yeah, I was wrong.
And there's a bit of an interesting relationship here because you did get in that. I mean, that is still early, and
Yeah.
and so you did get in personally quite
Yeah.
early in it. And yet the first time we spoke about Bitcoin, you were pretty strong in your view that, hey, Andrew, it's not financial planning industry just is not ready for this
Yeah.
conversation yet.
Yeah.
And so, that was a while ago now, but you're obviously a personal, well, I'll let you describe whatever adjective you want, but an
Yeah.
advocate
Yeah. Yeah.
but you recognize that there's limitations in the industry.
Mm.
And this is something that you really specialize in at Ensemble is teaching the financial planning community about new
Yeah.
technology, about new
Yeah.
innovation. And where
Yes.
it's often quite complex and guiding them through from a trusted perspective. Where do you think Bitcoin is in its evolution? When do you think it's going to hit into your content narrative? And what can you learn from previous technologies or innovations that you think we should be focusing on when the industry is ready to start consuming this new asset class?
Yeah, okay. There's a few sort of layers to that question. So, yes, I am massively personally interested in Bitcoin. There is the first thing, when I wake up in the morning, the first thing I check is the Bitcoin price.
Yeah, me too.
Absolutely. Yeah. BTC USD is the most searched thing on my phone. And I'll check it multiple times a day. I am insanely interested in it. And yet my personal holdings are essentially zero at this stage. They are, I've been through enough cycles to sort of, so to speak, take my money and run at the current sort of price that it is. Now, notwithstanding that the technical analysis shows that we may in fact be looking at 50% between in the next kind of like couple of months, right?
Yeah.
So in terms of a 4-year cycle is concerned, there is a relatively good chance that Bitcoin will massively perform well over the next few months. And yet I have no holdings, right? And so I guess that's sort of like a really relevant and articulate, I would call it, reason for why I don't think financial planning and cryptocurrencies go well together. Certainly, that is my overview as it currently stands. And yet, I do think that it is, as I said before, wrong. So I have a strong opinion on from a personal stance. The very first time I tried to buy Bitcoin, as the story goes, was 2013. This is before exchanges existed. And I'm sure maybe exchanges existed, but it's not how I stumbled upon it. It was more like an eBay store where people were selling one Bitcoin at a time. I'm selling one Bitcoin for 200. I'm selling one Bitcoin for 220. I'm sending one Bitcoin for 195. And so, I paid my money and they said, give us your address. I sent my hard address, my mailing address. The Bitcoin never turned up in the mail. And I thought, as I had a couple of years earlier in 2011, I thought I was scammed. And I said, I knew it. I got scammed. This whole thing's not real. And it was only a couple of years later that I realized that no, they meant a Bitcoin address, not my mailing address. And so I've been through a few cycles. I'm up certainly across all the cycles, but I've also experienced the downside, most notably with the FTX failure a couple of years ago. And I kind of preface all of that with I have a personal opinion of it. And my personal opinion is very similar to, I would say, many high profile, highly experienced, highly respected financial planners have.
Mhm.
And I'm not including myself in that. I'm not a highly experienced, highly profiled financial planner. I'm just mates with a lot of people that are. And in their personal lives, they all share the almost identical view as myself, which
Yeah.
is this is the latest asset class since, I'm not an asset class historian, but certainly, if you would think of housing has been around for thousands of years,
Mm.
foreign exchange might be something that's more recent.
Maybe bonds or something.
Right. That's and yet that is probably like 100 years old, like something like a relatively, would have some history behind it. This is just an asset class that was started in 2009. It's the most recent one, and it goes without saying that it is an asset class, and it's clearly the best performing asset class since 2009. And and if you really kind of get into the geeky side, it solves what's called the double Byzantine problem. But essentially, like, how do you send something online that doesn't replicate? How
Mm.
do you marry up scalability with scarcity? So if I email you a Word document, there is now 2 Word documents, one on my computer, one on your computer. Combining scalability and scarcity means if I send you a Word document, it's deleted from my computer. It's only on your computer, right? And so so the blockchain does that, right? And then so to incentivize the use of the blockchain, some tokenomics were created. And realistically, if you look at kind of like the original game plan for Bitcoin, it hasn't succeeded. It hasn't replaced cash. It's not used day to day. So the digital cash thing kind of failed. However, the store of value, the movement of, again, information in a way that produces scarcity, like contract and Ethereum contract, for example, all of that functionality exists, and yet it's still, no one's using it. Like, no
Yep.
one's actually using any of the technology that all of this was built around. But the
Yeah.
tokenomics element of it, the economic element of it, the financial element of it has absolutely taken off. Like, it's insane, right?
Yeah.
And so the reason why, I think if you kind of, as I mentioned before, like, the question sort of had some layers to it, but the last part of your question is, why hasn't it been adopted by financial planners? And I think it's because of the dichotomy between, obviously, from a technical point of view, it solves problems, and yet it doesn't solve problems yet, or at least the adoption of the blockchain in terms of what it can facilitate in terms of data exchange just hasn't materialized really at all. We're seeing some early signs of it, but mate, we've been seeing early signs of it for 10 years, right? So that part of it hasn't taken off. And so if you can't rely on the actual kind of use case for it, it's like, well, where is the actual value? So if we look at the total market cap now of, let's say, all cryptocurrencies, I don't know what it is off the top of my head, but I'm imagining it's like somewhere between $5 and $10 trillion, like something along those lines.
About 6 trillion, 6
Right,
point something,
right.
6.5.
Yeah. Right. So now, like, that's obviously, there's more value in these technologies, right, that don't currently do anything than or it's going to be very close in value to, like, the top performing companies in the world, right? So that, let's say the
Yep.
top 5 companies, like something like that, like maybe
Bitcoin. If Bitcoin was a company, it would be ranked number 6 or 7 now. It's just taken over. I think it's just below Amazon and just above
Right,
Microsoft. I think.
right. And yet, what does Bitcoin do, right? And so you compare it to what it does compared to, say, Amazon. Amazon delivers hard goods to my house at the the level of infrastructure required to successfully grow Amazon as a company. Think about Tesla, right? What Tesla does for the world. What Bitcoin does for the world is it sends a data point and marries up scalability with scarcity. There's nothing else that it does, at least
Well,
in terms of what's been adopted.
so I think if we draw a distinction between cryptocurrencies and the
Mhm.
technology, I think from a technology point of view, we've seen stable coins come out, and there's more money transacted now in stable coins than Visa and MasterCard combined now. So
Mhm.
stable coins have taken over global payments. They're accelerating their adoption because it's faster, cheaper, atomic
That's a
settlement, all
good
these
point.
things.
That's that's a
And
good point.
I think that we're also seeing real world assets as regulatory change is happening in the States in particular. Real world assets and decentralized finance is really starting to emerge. Once the Clarity Act comes out, that will give a green light to institutions and corporations to enter into this, leverage this technology with confidence. So and if you look at things like logistics, it's really starting to revolutionize logistics. So I think the technology is being really seen now. If we think about it as distributed ledger side of the technology, is seen as, even the OECD are saying that's the future that we should be aiming for with monetary systems, right? So the technology is now understood and accepted as the future, the evolution of where we're going to get to. And different industries will get there at different speeds, but it's happening.
Sure. Yeah.
From the cryptocurrency side, though, I mean, most people will look at, if we just look at Bitcoin, it's the big daddy, obviously. Most people will see it as a long-term store of value, so digital
Yeah.
gold. And so if you
Yeah.
compare it against digital gold, it's about 10% of the market capitalization of gold.
Yep.
And so if you sort of say, well, gold is a long-term store of value, it is a hedge against inflation, against monetary debasement, against sovereign risk, all of these things. And this is, in today's geopolitical environment, why gold is booming, and has such a big run this year. And Bitcoin is also, seen as that same use case. So, but that's why Bitcoin has, depending upon what timelines you look at it, is sort of lagging gold's boom, but it's basically following the trajectory. So yes, Bitcoin was adopted originally or invented originally as a transaction, but it's become a long-term store of value because it's trustless. It doesn't require trust, and no one can touch it. You have sovereignty over your own value, your own value that you can store yourself, you can hold. You don't have to rely on anybody. So I think that's Bitcoin, and that's why it's sort of seen as being a legitimate asset class in the lives of a lot of people. Even JP Morgan, who have always been the biggest crypto cynics, are now basically saying that it should form part of any balanced portfolio. BlackRock's most profitable product for BlackRock, the biggest asset manager in the world, is Bitcoin. That's their most profitable product out of any of the products that they've got.
Right.
Their Bitcoin ETF. They're making more money out of that than anything. So they like Bitcoin. And even I heard something yesterday that Morgan Stanley, that they've just been advising, saying to their financial planners, and keep in mind, they've got about the same number of financial planners working for Morgan Stanley as Australia has in total, about 16,500. And they've just been given them direction that you need to be getting Bitcoin into people's portfolios as a standard. So, it is taking pace, but I think that, and this is probably the real challenge in Australia in financial planning is, that you've got individuals who are financial planners who are sort of saying, I'm interested in it. I might even invest in it myself. And then you've got the retail investor market where 32% of Australians invest in it already. And yet as an industry, the industry hasn't been able to say, this is how we can talk about it. This is how we can manage this as an asset.
Yep.
And that's the really interesting bit, that both parties in that conversation are kind of advocates of it, but they can't talk about that, and they can't set some guardrails to enable that.
Yeah, so I totally agree with everything you just said, but I'll just double click on the gold element, right? So if
Yep.
financial planners consider themselves, amongst other things, wealth managers. And the most famous wealth manager of all time, being Warren Buffett, says there's a rock that you dig out of the ground and you put back in the ground. It doesn't do anything, right? And then, but to gold's credit, at least it can be fashioned into jewelry. At least it can, serve a small role in electronics componentry and things of that nature. And so there's not a huge use case for it. It mostly is just a rock in the ground that you dig up and bury back in the ground. But there is a small use case for it. Whereas Bitcoin, and this goes to the heart of the lack of the adoption issue, is that there is no use case. It's just a store of value, to call it that. That's its sole use case. And so to say that the valuation of Bitcoin is let's call it the same as Tesla. Well, like as a value manager or as a wealth manager, it's hard for me to rationalize that Bitcoin, which doesn't do anything, is the same value to the world as Tesla. That's creating self-driving cars. And so that is the core fundamental, and I use that word fundamental very much on purpose. Like fundamentally, it has no value.
Well, I think there's a distinction that I'd put in there, which is it doesn't create value like a company would create value.
Right.
And as an investment manager, that's essentially what you're doing is you're saying, how much is that company worth? How much value is it going to create in the future? How confident am I of that additional value that it's going to create? And that drives your investment appetite, right?
Right. Yep.
But Bitcoin isn't creating value. It's not trying to create incremental new value. What it's doing is it's saying, if you want somewhere to store your value that isn't going to be affected by Elon Musk's crazy antics, Donald Trump's money printing, Xi Jinping, whatever he might do, or whatever, or the UN, nobody's controlling it. So there's no person, there's no government, there's no entity that actually is saying, we're going to make decisions that's driving this value. Instead, it's saying, you want to put some of your money away from all of those influences into something that is trustless, where you don't need to trust anyone. And it's scarce. There's a scarcity built into it that can't be changed. And that's why Bitcoin is starting to, form a part of a lot of different balanced portfolios now.
Yeah, no, totally. And I totally agree with all that. But that's not good enough, particularly for financial planners. And so if you, from a fiduciary duty responsibility point of view, right? So like I would like even gold. Hey, long before Bitcoin existed, I was a gold bug as well, right? So like I'm a big fan on a personal level, big fan on stores of value, on sort of hedging against, I would call it, poor decision making by governments the world over. Big fan of all this. I foresee issues in the future where things like gold and Bitcoin are highly valuable. But also, that's hard to articulate from a risk management point of view. Because if my thesis for now, don't get me wrong, when I was a financial planner, all of my clients had an allocation to gold, regardless of their risk profile. I was one of the, and that by itself was almost something to be sneered at by other financial planners, right? Like, and again, for good reason, because it's hard to articulate the value beyond, look, the government's probably going to ruin your money, right? It's almost an anti-establishment investment thesis, right? And so from a fiduciary point of view, that's kind of hard to defend. And I kind of wanted to set the scene. First of all, I wanted to set the scene with, I'm a big fan of it personally. Then I wanted to set the scene as to why financial planners don't adopt it, right? But the kind of where I'm headed with our conversation is that it's, and I alluded to it before, and I want to articulate this really precisely, and that is I believe financial planning should allocate, I think it's diligent, I think it's even responsible to allocate money to cryptocurrencies within everyone's portfolio. So that's my genuine belief. I prefaced all of that with why it's not happening and the reason why it's difficult. And the investment thesis is very hard to do. And by the way, I can expand that investment thesis difficulty into professional indemnity insurance with approved product lists, with like the fact that you're essentially taking on personal risk, right, by recommending, which is essentially why advisors don't. So that's the result of all of those difficulties. But something that I read about not even too long ago, and I think this is the perfect example. All right. So now there's a financial planner in America. He runs either like the largest or the second largest independent financial planning company in the world. His name's Rick Edelman, something like that. And he's got this Rick Edelman show. Anyway, for context, his company manages in Australian $500 billion. So like this is insanely large. Like in Australian money, at least $500 billion worth of funds under management. So he came out not even that long ago saying that everyone, regardless of your risk profile, should have an allocation to Bitcoin.
Mm-hmm.
And so that's where I'll start with this story, right? So this guy, largest, most successful financial planner, independent financial planner in the world, comes out and says, everyone needs an allocation to this. Now, you sort of like peel back that onion a little bit and you see, oh, wait, he's no longer a practicing financial planner. So we kind of end up in the exact same dichotomy as with myself, with all the other financial planners I know that are investing in their personal lives that don't recommend it. And you end up at the exact same position, whereas you've got this guy, the number one, I think it's Barron's number one financial planner in the world, is screaming into a microphone, get your clients into cryptocurrencies, and yet he's no longer practicing advising. So it's so quite frankly, like, well, he can say what he wants. I can say what I want because I don't have any clients. But where the difficulty is, where the rubber hits the road, is how do you provide an investment thesis which doesn't involve, hey, the government's just going to ruin your money, and it stands up to all of the regulatory and compliance hurdles that financial planners experience on a day-to-day basis.
Yeah.
And that's my total view. My total view is I personally love it. I know the complexities, but quite frankly, there needs to be a pathway to solving those complexities, because I personally don't believe, and the number one financial planner in the world says to agree with me, or let's say I agree with him, that needs to be solved and that needs to be rectified. And so it is an entirely difficult, complicated, multi-layered situation. And until the complexities are solved, I think it'll just be like gold, where a lot of financial planning clients will miss out on that upside. But the fiduciary duty which is, it's the wealth manager's Hippocratic oath, right? Like, we have a unwielding, impartial view to build wealth for our clients at any cost. And in fact, that cost may be at lower returns because the difficulty in articulating a proper investment thesis.
Yeah, the best interest duty is central to your role as a financial planner, and you are personally liable to it. And we see plenty of that playing out in courtrooms as well. So I think, I take your point that you might personally be recommending it, but you can't recommend it is the issue.
Yeah.
And so, I spent a lot of time thinking about this, and I think there's probably two layers to it. The first layer is that there are plenty of financial planners or accountants, wealth managers who don't understand it enough, so make an informed opinion. So the first barrier is education, and that's probably about 50% of the market of advisors and financial planners. It's just about helping them learn more about it so they can make their own personal informed decision about how they feel about it and how ideally they would like to deal with this asset class. That's the first sort of layer. And then there's the second layer, the people like yourself who do understand it. And then it's about, well, I can't talk to my clients about it. So, and you say that, you talk about a pathway to that. So what do you think the steps in that pathway? You've mentioned a couple: getting it onto the APL, the approved product list, so that it can then be covered under PI insurance, to practical elements of it. How can we, what are the things that people can do, that I can do, that others in the industry can do to help set those guardrails in place so that it can make its way onto an approved product list? A licensee can say, look, I'm not going to put all, meme coins and all crazy coins on the product list. So there's no way, right? But I am going to put the top 10, say by market cap, on, and I'm going to make sure that I'm putting them in the right context that, hey, look, I wouldn't, unless you got a highly risk focused client, I wouldn't be putting more than 5-10% allocation, but, blah, blah, blah. What are the things that we might be able to do to help assist those licensees to be able to make that decision?
Yeah, certainly. Well, the financialization, I guess you could call it, cryptocurrencies has been underway, I believe, since about 2019 was the very first time that there was any kind of derivative at all to be able to trade, and I believe that was Bitcoin futures, if I'm correct, back in 2019. So it's become substantially easier, right? Like as you mentioned before, the ETFs are out. The ETFs are there, and look, as someone who has lost by, one of the great sayings inside of crypto land is not your key, not your coins, right? So now the downside to that is FTX may go under, which actually, if you really want to break it down, that's kind of the point, right? Don't hold your crypto
Absolutely.
on an exchange. Although, like, as someone who's had the cold wallets and all of that kind of stuff, man, it is finicky. It's
Yeah.
not
I know.
it's not retail, right? And so,
And there's a lot of risk on you personally as well.
oh my God, absolutely. Like, don't lose your zip drive, right? Like, don't forget your password. Like, don't forget your seed phrases. Seed phrases are essentially just a replication of a password. Um, Look, I think if I was to ever, or when I, not if, I'll wait until, and of course, this time it's different, right? But I'll wait until the price comes back a bit, after we get this next bull run, and we undoubtedly the 4-year cycle continues until proven otherwise. I'll get back in, and I will only buy the ETF. So moving forward, I think during the last sort of bull run, I bought one of the ETFs, but it was an American-based thing. I had to kind of do it in a weird exchange, and it wasn't great. I think and this is not financial advice, but there are large companies that issue, the largest financial services companies in the world are now issuing their own ETFs, and that's how I will do it moving forward. Don't shoot the messenger. I understand that's, for those sort of, hardcore Bitcoin maxis out there, that's going to not make them happy at all. However, that is how I will hold moving forward. And so, I mean, in terms of getting it recommended to clients, that's a great first step, right? So, like, all of a sudden, that's legitimized, certainly in as far as like the financial system is concerned. But I haven't seen the data on this, but my guess is that the majority of inflows on that is going to be retail unadvised. My guess is that the majority is unadvised. At a certain point, you mentioned before 30 something, or was it more? 30-something% of people in Australia have investments in crypto, right? And that's been growing for quite some time. And, at a certain point, you just have to say, well, I mean, how many people am I going to meet until I stop scoping their advice out, right? Like, at what stage does it become irresponsible from an asset point of view to just consistently scope out this asset class, right? But then on the flip side is, if you're speaking about ASIC, is they have notoriously gone after anything to do with crypto in the past. Now, they also famously are challenged for those decisions and typically lose. Now, all of this is publicly available information. I'm not saying anything that isn't sort of not already been in the press, but one could argue that there is also, whether correct or not, a regulatory risk for pursuing it, right? And so let's even say that it's been adopted by the financial system, which it has at the Australian regulatory level. I haven't seen really anything to suggest that this is, that you're going to be able to walk down this path and not experience any unforeseen issues.
So there's been some recent developments in that. So we're sort of filming this sort of mid-October. A couple of weeks ago, ASIC actually released 2 new AFSLs, Australian Financial Service Licenses, draft position papers for 2 crypto AFSLs. And so that's pretty hot off the press. They've been talking about it for a number of years, and the discussion papers came out. There's still a bit of work to do on it, like their definition of tokens and a few things like that are a bit problematic. And when you get into the more exotic sort of, components of crypto, like airdrops and, things like that, like when is capital, what triggers a CGT, transferring between wallets, all that sort of stuff. But the experts are working through that at the moment. But they have signaled, but they have actually released those draft AFSLs. So people are working towards them at the moment. It's an interesting approach that they're taking, where they're saying we're not going to consider the financial product to be the token. We're going to consider the financial product to be the exchange. And so they're regulating the exchanges, and they're saying if you're operating on exchange services or other trading services, that is the product.
It's easier. It's definitely the easier option. Yeah.
It is. And so I'm sort of working my way through that at the moment from a legislation
That actually
point of
makes
view.
sense. That actually makes a lot of sense, because then it's the responsibility of the exchange to not have rubbish on there, right? That's kind of a good approach.
Yeah, but it does leave. I'm still working through the question of, well, in a practical sense, can X, Y, Z, can this advisor A have a conversation with their client and say, yeah, I think you should put 5% into Bitcoin. I'd probably put 2% into Ethereum
Right.
and 1% into Solana.
Right.
Like at that personal advice
Yeah.
product level where you're giving token recommendations. So I'm still sort of getting my head around how that's
Yeah.
all going to work. It
That's
seems that
cheeky,
if
isn't it?
you're under an AFSL for a platform, I think that means that any token on the platform you are allowed to advise on, but
Yes.
don't hold me to that. I'm still just trying to get confirmation from a proper
Yeah,
legal.
makes sense from the regulatory's body's point of view, in the sense that put the pressure on the exchange and then don't give an opinion on the underlying assets. That's classic. 100%. 100%. I could see why they did that.
I think it'll play out pretty rapidly, though, as like it'll evolve fairly rapidly, because in the States they're working through all of these token definitions in detail under the Clarity Act. That's in debate at their Senate at the moment.
Right.
And so when that comes through, I think that's going to lay a really good legislative foundation, that other jurisdictions like Australia would be able to adopt if they align to it. And I think it seems that Treasury are kind of probably more aligned to that. ASIC are probably more aligned to, well, we'll just manage the platform, but ultimately it's going to come down to the politicians to say, well, what's the best solution? And obviously, protecting investors is probably their bigger priority out of their other priorities around creating a resilient and high performing financial system, and cultivating innovation in financial services, which are also their responsibility, what they're trying to achieve. But obviously protecting retail investors takes priority.
Yes. And also, and this is dipping sort of slightly into the government's motivations. Centrally controlled digital currencies are looking to be, probably, for all of its pros and cons, yet to be seen, but probably can be theorized. The motivation to go down that path, I'm sure, is playing a role as well.
Well, so China have brought out their own CBDC, which is basically, for our listeners, it's a stable coin, a digital coin that is controlled by the government. So they can hardwire into that money rules, like what you're allowed to spend the money on, who gets
Which is
what
wild.
money. I
So
know,
wild.
and it's really that Big Brother state on steroids. And
Yeah.
interestingly, the US actually passed this law, an anti-CBDC surveillance act, like earlier this year. So they said, not only are we not going to do it, but we're going to legislate that we're not allowed to do it. And they passed that law. And that's we underestimate how important freedom is in American culture. And it really was that whole freedom moment of the politicians going, we've got to shut this down because it is bad. And the government's proven that it can't be trusted. I mean, they gave it a money printing machine and said, but make sure you don't abuse it. And what do? Just like kept pressing go, print, 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 print as fast as they could.
Yeah, but I mean, and look, and I, I've some opinions on this, but like the amount of times that I've seen governments unwind, protections for the people, so to speak, in the name of some kind of horrible tragedy.
Yeah,
You can
anything's
almost
possible.
see it. You can almost see it playing out, right? At the end of the
Anything
day,
is possible.
Yeah,
Australia is also building out a CBDC,
I know.
but it's a wholesale CBDC. So it's not a
Yeah,
retail CBDC. So it's not going to be used by retail investors, punters, for us buying our groceries or getting paid our salaries in it or anything like that. It's only going to be used by financial institutions and how they transfer money, like, in the overnight swaps
the
and all of
libel.
that. So
Yeah.
which is really about cost efficiencies, but with all of those controls. So in that context, I think it's really smart and a
No,
great idea
100%.
because there's no
100%.
freedoms at risk there.
Yeah, no, absolutely. I think the only risk is probably the people that are making a fortune off the overnight.
Yeah, arbitrage.
Yeah, the libel guys. I think,
Yeah,
except for them, I think everyone's going to be happy. Yeah. So look, the digital centrally backed digital for and against the side. I think at the end of the day, the financialization of Bitcoin and exchanges receiving AFSLs by the sounds of it, which I think all of these are super positive. At the end of the day, financial planners are famously laggards because of that due diligence, because of the best interest duty, the fiduciary duty, and they never want to be the first to make a move because they don't want to, rightfully, and this is responsibly, and this is what you want in a financial planner. You don't want someone to take a risk on your behalf that didn't need to be had.
it's got to be balanced. Yeah.
Yeah. However, I am very much looking forward to it in a personal capacity. As far as I'm aware, first financial planner in the world who was able to receive Bitcoin as payment for financial services in 2013. Although I never had a client actually want to take me up on the offer, but I was set up to do it. I do hope that there is an adoption. I am massively bullish. I mean, sometimes I just think about like how impressive it is just as the technology and how I do understand all of the issues between financial planning and that brand since 2009 digital asset, the latest asset sort of creation. But I am hopeful. I do want to see it. I think it's great for people. Obviously, it's performed exceedingly well, and I'm on a personal level certainly behind anything that pushes that forward.
Fantastic. Now, Clayton, we're conscious of the time. Maybe if I can ask you one provocative final question.
Hey, let's go.
So you run one of Australia's leading education and professional training organisations. When do you think you would be expecting to see some crypto content coming through your platform?
Well, we did. We went pretty hard on it in 2002, 2003, something like that. It was great content. It was some of the most engaged with, most watched. It was great content. And the partner that we worked with on that was one of those companies that kind of came under the firing eye of ASIC. Now, they won. They were able to prove themselves that shouldn't have happened, and the company has pivoted and succeeded, in its own right as a data company now, not a financial services company. But it does give me reason for concern in terms of was it the fact that they did work with us that drew the ire of the regulatory bodies, right? Like, and I don't know if that played a role. And I think we made that decision based on my my sort of positive view of it. Although, did I sort of create a situation which had unintended negative outcomes? I don't know. I don't know. But that is something that we've had a few years to think about. I would say the next time we get involved, we won't be the first. We've done that. We've done that a few times, and I'm happy to see it play out in that more laggard approach this time around. So what I'm hoping to see is other financial services education companies going down that path before we do.
Yep.
When we get back into it.
Safety in numbers.
Yeah, correct, exactly.
Fantastic. All right. Well, hopefully I can help facilitate some of that and get a few other partners on board, and maybe we start seeing some education content coming through the Ensemble network as well in the future.
Excellent. I would welcome it.
Fantastic. Well, thank you, Clayton. I really appreciate your insights and your time. Very entertaining conversation as always, and I look forward to continuing it sometime soon.
Andrew, thank you so much for coming on. This is obviously a very, it's a passionate project. It's a passionate topic for me, and marrying up that with the responsibility and the mandate of financial advice and that difficulty is something that I enjoy as a topic quite thoroughly. So I appreciate the opportunity to discuss it.
Fantastic. One last thing, where can people find Ensemble or follow you? What's the best way to stay for our listeners to keep in touch?
Yeah, absolutely. If you're a financial planner, go to ensemble.com. And my guess is by the time this podcast comes out, that we will see what the next iteration of both Ensemble is and where my attention will be. So I'm looking forward to that as well.
Wow. All right. You heard it here first. All right,
Awesome.
Clayton. Thanks very much.
Excellent.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.